Hello guys, my name is Mariano, the Trading Parrot, and today I'm doing my second video in collaboration with Coin Bureau Trading. In today's video, we're going to do a comprehensive analysis of what has happened in the past week for Bitcoin and how strong are our chances of putting a new all-time high at this point in time. If you are subscribed to Coin Bureau Trading, you must have watched last Friday my first video, which was called No All-Time High, What's Really Missing. In that particular video, I admit that the technicals are screaming that this is our best chance to hit the all-time high and to enter into price exploration mode. But there are some key elements that are missing, and we had to recognize them in that video, which is global liquidity index, lack of liquidity, dollar index, gold still not doing what we are expecting gold to do, and the Federal Reserve still being in quantitative tightening. In today's video, we're not just gonna look into the short term, for example, what's going on with the CME market at this point in time. Every weekend we pay attention to this to understand what can be our strategy, not just for the weekend, but for the upcoming days during the working days. We're gonna look into the 4-hour, this bullish flag that currently is in progress and is our best attempt to hit the higher levels of liquidity. We're going to look into the daily time frame, open interest, which is doing one of the most interesting things, and it's been doing it once again. The star of the show, Onchain data analysis, where we are going to cover what the whales are doing behind the scenes. These people are the people that know what needs to be done at every single time. But if you decide to watch this video, make sure that you do yourself a favor and don't skip the liquidity analysis, because there are some new developments that might indicate that that liquidity might come simultaneously, potentially, with this breakout of Bitcoin. Therefore, waiting for that liquidity to reveal itself might leave a lot of people behind. Guys, make sure that you subscribe to Coin Bureau Trading. I'm putting one video per week. Some weeks I might be able to put more videos during the week. You can also subscribe to Coin Bureau Trading on Twitter to get notified. And thanks so much. In the previous video, guys, the feedback was outstanding. I'm really flattered with all the comments from you guys. I read each and every comment, and the video made it also to the Coin Bureau official newsletter. What an honor for me. I'm really still with a big smile after I learned that my video was watched by so many people. And while you're here, make sure that you have a look at the description. The best bonuses, 100%, are located at the top of the description, started with Bluffing, Bybit, and OKX. Let's start with the CME strategy for the weekend. The best thing that can happen at candle close on CME futures, and notice that CME closes before midnight, is that we close at the highest price possible on Friday. An example of that was Friday 27th of September, that we closed at 66k. When during the weekend the price collapses like this, and by Monday the price is still putting a low, when the market opens on CME, particularly on futures, it creates a gap. That gap acts as a magnet for the price to come back and close such gap. So potentially, if by Monday opening the price continues going lower, we know that we have left in here a magnet that will eventually attract the price back to where it came from to close the gap. And because of that, we use this strategy to think that dumps during the weekend, from the point of view of CME, it acts as an insurance for the price. So we know that eventually there is a high chance, a high probability that we close that gap in the upcoming days. Sometimes it can take weeks, sometimes just a few days, sometimes just hours. But the point is, it does leave liquidity behind, and that attracts the price. As I was saying, in here there was a gap. By the time the market opened, it continued going lower, and we continued talking for 2 weeks that that gap was still there. Eventually we did close it. The only bad news that we have is that it's been 6 weeks that we still have a gap between 54 and 54.5. The gaps at the top end are all closed, and ideally if we close on Friday at a price of 68.6, and over the weekend we saw some resistance and we came back below to print an actual low, which is something that we have struggled to do in the past 2 days, then we're going to be measuring that gap, and we're going to be talking throughout the week when is it going to be that we are going to be able to close it. Speaking about this very insignificant pullback, we've been talking during the week about the potential of printing another bull flag, small flag, on the 4-hour time frame. We even draw saw this thing and we were expecting to print some sort of bull flag there. We also have the expectation of finding a low in any of these areas of interest that are formed by fair value gaps and order blocks. We also say that if the price action was bullish enough, potentially we might not even go to those and we might just continue putting higher highs, respecting the outcome of a bull flag that is breaking out to the upside. We say this morning that the key to distinguish that, to not get taken out with just a small bounce up and then still get dumped, was to use the RSI. That is my preferred tool at the moment to distinguish between hitting resistance and continuing down below this line, or having a breakout closing significantly above it and then confirming that we might have just another push into this area in here. This morning, when I put my update in my own channel, The Trading Parrot, I published that on Twitter, Telegram, and Instagram. I mentioned that we actually broke out. That was roughly published at 8 a.m. UK time, but I mentioned that that was a very, very humble breakout, that it was recommended to see how the full candle closes, and it did close below the resistance. Right after that, with this candle that we are currently forming, this has probably a few hours before it closes. If indeed 1 hour 13 minutes before it's gonna close, this one looks a lot better for a breakout to the upside, and that is thanks to this big green candle in here that is testing the 68.5. Stick with me until the end of the video. We're gonna look into the liquidity, liquidation pools from trading different, and you're gonna see there how big is the liquidity that is at stake. At the moment, we are also approaching finally the CPR first resistance of the month of October. In September, we couldn't manage to test it in here, and you see the outcome of that. Typically, the CPR model says if in a month you don't make it to the first resistance of CPR, the next month you are going to see a lot of problems. So I'm very keen that if we are going to put a low in here for the price, I really want the price to get to 69 and hit that level. And that's not just from the technicals, that's also from the liquidity standpoint of view. We are going to see how much liquidity there is there just in a minute. So in summary, on the 4 hour, we do want this candle to be breaking out in here, and then we're getting a chance that we can get to that 69K. If we see a big rejection and we see that this candle that is currently in formation ends up in the 4 hour being like a skinny wick to the upside with a body possibly even breaking below the fair value gap, that is not gonna be great. That's gonna be considered potentially as forming a double top, particularly if we break below 66.5. then we are putting a new low there and we are making a case for building a channel in this direction. That direction is the direction of completing a double top. That is going to cause a lot of delays to really hit the highs, to get to above 70s, and to hit the big chunks of liquidity that could ignite a short squeeze into possibly even 80K. Let's look at what the 1 day is saying. The 1 daily time frame has this beautiful RSI channel to the upside, where we see that the RSI bounces each and every time from the bottom and from the top. Recently, we have a breakout in here. We put this high at RSI 67, slightly higher than the 66 that we had late September. And thanks to that, I started speculating that we could do another attempt to get to 72. 72 in the price, thanks to the use of reverse RSI techniques, we can see that that corresponds to 69.659. There is a confluence with the top of the range of the volume profile. Why do we care about that blue line there? Well, it's been the top of the range of all these past 6 to 8 months in here, and a breakout from the top of that range has huge implications. Of course, if we close the daily already above the top of the Megaphone pattern, that is already fireworks, but exiting the top of the range is kind of the second half of that party of confirmations from all traders. Rest assured that we are already here, many shorts are not finding any sleep. If we get to the top of the range at 70k, pretty much many of them that are already underwater, under a huge stress, are gonna start thinking this is the time to throw the towel, this is the time to close our positions, and the more they do that, the more the price is going to continue going higher. Each and every short that gets closed, either intentionally or unintentionally, because there was an account liquidation, turns into a market buy order, which sucks in the price to the upside as well. Let's look at open interest. Open interest has a lot to say and has had a lot to say throughout this whole period. We have divided the range of the open interest in three. We have the first tier, second tier, third tier. And when we were here, we were already talking about a potential for a reversal back into the 21 billion. That happened on the beginning of September, and we are here mid-October, and we are already at the 21 billion. But not just that, each and every day that we are here, we are counting how many tests we have of the open interest. There's huge insights, and if you are a person that has good attention to detail, you're going to notice that here we have three attempts, no attempts, or you could say just one, three attempts, we could say, and today it's the fourth or fifth attempt. Not just that, we are above the level of resistance. If we close the daily in here, that is huge. Most of the people think about open interest as it's too high, we're due for a correction. And that's totally true. I understand it. But if you are also paying good attention, you're going to notice that from the bottom of the bear market, we are climbing in amount of open interest. And that's natural in a bull run. And whenever the price breaks out, the open interest creates a new range. In this area in here, you have this range. Then you have this other range. And then you make a quantic jump into a new range. So if price was to put a new all-time high, we are talking about forming a new range on the open interest somewhere around here. This is just speculative. I might get it wrong by many billions. That's all right. But the important part is that we are not coming back to this range if we make it to 80k and we start price exploration. So it's important to look at what is the open interest currently doing. After it put this double bottom formation, we broke out, we retest, we came here, and we have been for way longer than ever before at the 21 billion. And if we close today this candle in here, that's gonna tell us a lot. Even though if price hasn't done that all-time high, the open interest has acted repeatedly in this range, doing things before price. And I don't know how many people have noticed, but open interest is acting as a leading indicator. So I'm not gonna stop doing this sort of analysis because it's been profitable for me as well. On-chain data. What are the whales currently doing? Big Whale Explorer is being very precise on what's going on at the moment. We have a 73k, at 72k, at 70k, and at 65k, 4 strong distributions. And what I'm seeing here is that the ratio of withdrawals versus deposits is very well balanced at the moment into withdrawals. These are big whales, guys. These are people that are making the largest transfers among all the blockchain in Bitcoin, and they have decided that now they want to withdraw. Withdrawing from exchanges is bullish, and we've been monitoring this since August. From the breakdown of the trend line, crossing the moving average, getting resistance right there, crossing the level of 1. The next highlight was to cross the 0.5, which means that withdrawals are doubling deposits. And now we are at a level of roughly 0.4. That is as low as the accumulation we have here, and also as low as the accumulation that we have in the previous October. That led to almost 200% rally in here. I am not going to ignore this data either. And one of the things that had me a little bit concerned was how much selling there is from long-term holders this week. You can appreciate that since July and back until April, there's been a huge accumulation that increased almost at levels that we saw during the last pump of the bull market. And now there's been some selling. We could say that roughly 20% of the accumulation has come back in here. Not at levels I am concerned. If we were to undo this whole thing very quickly, I will get very concerned, but just 20% is still not enough to put a red light, at least from the point of view of this indicator. And yes, the Megaphone pattern has bounced from the Fibonacci level, golden pocket. We have managed to start from the top of the bull market support band into the last resistance of the Megaphone pattern formed just by wicks, which is a lot more of an achievement as if you place the resistance just in the bodies of the candles, and we could be seeing very soon a breakout in here. We have the recipe for that. Nothing is guaranteed, but all my eyes are on this. My position currently is sub 60s. All my entries have been documented in my Twitter account. I got entries at 53.5, 57 and 59. I wanted to re-enter here expecting the price to go to 57, and I couldn't manage this week to do so because price only made it to 58.8. I'm still happy with the amount I managed to accumulate and with the average price. If there was a massive rejection in here, I got a plan. I always do. I never assume that things are for granted. We can discuss on another video about that. I have done it plenty of times in my channel already. Last Monday we have a bullish cross on the MACD that was pretty significant, and I think at the moment it is playing out. I made a mistake last week on the stochastic RSI on the weekly. I claimed that we already had a bearish cross confirmed on Monday. That was wrong. At the moment they just happened to kiss, but they never cross. And the current candle live on the stochastic RSI has the mouth slightly open, giving us some hope that this week we are not gonna see a bearish cross. The RSI weekly is pointing up, putting a new high, continuing this trajectory with a support from the white line into the next resistance, which is 62. We'll see how we do when we get there. We are well in the grid. If we were to break out, expect to start seeing extreme grid, and we have reached the level where we're gonna look into liquidity pools from trading different. You can see that we have a huge, massive motivation for the price to continue going higher. Some people have been asking me, hey, Trading Parrot, you are becoming a perma bull. Guys, I've been for long enough short. When you have this sort of motivation for the price, a low hanging fruit in big red, you just cannot be bearish. It doesn't mean that the price cannot see a rejection, put a double top, and then see a couple of weeks more of pain. That is still on the table. But the point is that now for the price action is extremely easy to continue pushing just because there's a huge motivation right here hanging, and those shorts, believe it or not, are currently either closing positions or considering to doing so over the weekend, and that could be a big fireworks party in the upcoming few days. That is not discarded. The liquidity continues but becomes a lot stronger when we get above 70k. Notice that these levels are of 40k. You can see the total right here at the top, 48k, then 47, 45. But then we go into red above 70k. We go into 56, 62, 56. That is roughly 50% more. But that doesn't end there. If we zoom out, the normalization of the chart turns these colors into green, and only the red starts from 72.6. These are the levels that are definitely going to offer the best feast for the whales. We have now 82, and at some point we get to 107k. That is roughly 3 times the levels of liquidity that we are hitting in here. I'm gonna switch now to levels of liquidation using the template scalping. But before I do so, let me show you where is the liquidity below the price. And you can see that the only significant one appears sub 60s. We have a new level in here that formed with this red candle there where people enter again in a long. That's why their stop losses are appearing now at 60.6. But you can tell that in order to hit that, the price needs to fall pretty much 7.6k down. And that only hits 11k of liquidity, whereas in here we have 40k, 4 times the liquidity, and is right next to the price. And I think that is the point. Let's look at the scalping on Bitcoin. And we can see that Bitcoin has been pretty busy hitting the stop losses that form right around here. We were talking last night on my Telegram that the price going down tends to attract a lot of people that are beginners. They think the price is just collapsing, we're going to put new lows, this is the top, and then they start shorting. They start shorting with the price coming down. I have told people, do not chase price. You need to anticipate things, having some sort of idea. And these people continue continue to do the same mistake. You can see here how they're placing their stop losses. Last night I say, before going to sleep, look for new stop losses form in this range in here. And if they form and they are larger than what the price was originally chasing, then the price is just gonna take a U-turn and go back to where's the highest liquidity. Futures pretty much govern the small moves of Bitcoin, and it is spot what actually determines the longer term. Speaking of which, if we look into the CVD for the past few days of Bitcoin, you can tell that spot has been a little bit putting new lows, not really believing in this move, whereas futures continues to add more to their position. This doesn't necessarily mean that it is the end, but it means that we should be looking for a low, and I've been doing that since yesterday. Unfortunately, the low that we were chasing yesterday only made it a few percentages to the downside. It ended up just forming a bull flag, but that just means one thing: we have pending putting a low. I also have fantastic news coming from hash ribbons. We have 2 consecutive buy signals, one that formed in July, mid-July, one that formed this week on Wednesday. These are very strong signals that look into the hash rate. This is on-chain data, and at the moment both signals are into the money. The one from before in July spent pretty much multiple months underwater, which is unprecedented. Typically these signals take way shorter to be in the money. They are one of the best signals in the market, and I think we have a very good chance that both together are going to end up playing out to the upside, giving us some good results. We are at an area of high risk. We have plenty of fair value gaps to the bottom. That is going to always act as a magnet to attract the price as well for putting a low. It is only when we start seeing a short squeeze, when the price just completely ignore all these fair value gaps and it starts rallying. You can see that happened in this area. In here we leave all these fair value gaps untouched, and sometimes we don't even ever come back to fill them. If I zoom out enough, you're gonna find fair value gaps from very old times that have never been filled. But when price is in a normal mode, we are still not in a squeeze, we tend to act in a balanced way, taking fair value gaps to the upside, then to the downside, then to the upside, and so on. And you can see at the moment we kind of have now a big depth into closing gaps in this area in there. So if we don't enter the short squeeze, if we happen to put a double top and somehow there is some bearish event on the news, that could be the perfect excuse to take them before we do another attempt. If we have a look at the order book on Firecharts, we're gonna see that the liquidity right next to the price, above the price, has increased significantly, and I think that is a result of so many people still thinking this is the time to short. 56 million right above the price, followed by 81 million. If you've been following my analysis for a while, you know that those two big levels are very big. Zooming out on the yearly, we can appreciate that that level is it's extremely big relative to what we have before, and it didn't take that much to push the price over 10k down in the previous range. The thing that we have in our favor now is the big whales and all the other technicals and this huge incentive of liquidations right above the price. If we focus on what the whales are doing at the moment, we can see that the largest whales, those are the brown ones, are at the moment going sideways, and the purple has sold a little bit, but it hasn't put a lower low, which means that is just taking a breather and potentially it could resume. We can notice as well that the green whales are now buying. Those are the ones that are taking the lead. You can see the size of those whales here at the bottom of the screen. And good news for my spread charts. I use 4 charts on spreads. One is against the volatility index of the S&P, one against the Federal Reserve's liabilities, the Brestwall, the Nasdaq, and followed by the dollar index. And the good news is that they are looking extremely healthy thanks to this last push into 68.5. You can see that the RSI of the spread has broken out. We could consider this move as a retest and now is in the process of putting a new high. The price has done the same, bouncing with a big green green candle in here. It looks really great on the VIX. VIX is very volatile, so this penetration here, thanks to the additional volatility of the volatility index, is quite expected. When we look at what's going on with the Fed spread, we can see a big green candle that looks beautiful with a higher high after the confirmation of the RSI breakout on the weekly. The Nasdaq has been the most lagging one, and at the moment is in the breakout area with a humble break of the resistance and putting higher highs on the RSI. These spread charts, guys, I don't know if you have seen them before in my channel, but these are the leading indicator for the biggest moves in all Bitcoin history. There is nothing that gives you the best entries. You can see, for example, this green line in here, that green line in there into COVID. You have the start of the bull market right here, followed by the resumption of the bull market. This is a 200% move, and the next breakout happened roughly mid-September, and we are just seeing the retest and the higher high following up with that. Really great news. The last one is the dollar index that is kind of in the same stage at the moment, breaking above it once again. One thing I want to clarify is that on the monthly chart, I do believe that we have done already the breakout. This candle in here is above the whole range if we put a trend line using the bodies of the candle, which is a little bit of a lower challenge for the price, sure, but I love the fact that the candle starts from above the resistance and now hitting the highs. It will be beautiful to either close October above the higher closing price in here that we have in March and in April. That is roughly 71k. So a close of October above 71k will be lovely. If not, in the month of November, breaking above it will absolutely confirm everything. And if you are thinking that you are late, guys, look at the socials. We are at 15. If we go back in time, in 2020, in October, we were roughly at 11. At that point, people were not believing anything that was going on in the market, just like they are doing in here. And guess what? They were all wrong. They suddenly started gaining interest once Bitcoin broke the all-time high, and then the rest is history. Let's go into what I promised. There are some new developments when it comes to liquidity. We can see that the global liquidity index has bounced. At some point it was touching the trend line, but it has reverted back up into that level in here. At the same time, it's curving to the side, and what that is telling me is that we might be about to put a higher low and potentially make a move into this area. That will confirm that this downtrend of the global liquidity index is about to shift. That could be thanks to the new injections in China, sure, but the last thing that we want to see is another low of the liquidity index and a penetration back into the previous range. That is horrible, and that's most likely, if that happened, that will take back Bitcoin down and make it more difficult to break the all-time high. Whereas a higher high in global liquidity index or in the M2 as well, you can use that too, is really positive news. We're going to continue to monitor this in the upcoming days and weeks. The second thing that I have good news is that the Fed, when it comes to their approach, investments in bonds, have done 2 weeks consecutive to the upside. We still don't have a higher high or a higher low, but it's good to see that this continues in this trajectory. What we really want is a breakout above this trend line to build potentially a channel to the upside inside here. Why? Because that is what we have done in the previous cycle. In December 2019, we have this impulsive move from the Fed, buying bonds, injecting liquidity into the system, and then we have this retracement in here that took Bitcoin down, and then once we resume this on with more quantitative easing, then we have the all-time high of the past cycle. And guess what this is? This is the bear market of 2022-2023. This is the bull run that we have had since beginning of 2023, and this move in here is the top of 73.5. So pretty much Bitcoin has been mimicking what the Fed is doing with their balance sheet, which is crazy. What we have in here is the liquidity from China that is still not substantial enough. That's why I don't get so excited when they talk about all these injections. If I don't see them in the chart, where are they? And finally, I'm going to talk about gold and the dollar index, two very important factors for Bitcoin to start having a rally. They are not a conditional. If those things don't happen happen and we get other aspects to get Bitcoin to rally sooner, this doesn't necessarily cancel the bull run. But of course, the more factors we get with a checkbox marked, then the higher likelihood that Bitcoin can rally. Each individual aspect injects more liquidity that Bitcoin can suck in and turn into higher prices. Starting with the gold, you can see that my speculative top, which was 7th of October, is well past. Now we are past mid-October and we are seeing another higher high in here. I think that the structure on the RSI still looks like a topping structure. If you appreciate that we might be putting a double top in here on the RSI, there are bearish divergences on the weekly, and when we superpose the candles from the previous rally, that once it topped, it helped Bitcoin to have the last leg of the bull market. We're looking forward to see gold potentially topping somewhere in this area, breaking down below the support provided by this yellow trend line and doing something like this. If gold was to do that, that will give us two messages. People are exiting the safety of gold, potentially going into risk on assets. Two, the liquidity from exiting needs to go somewhere, and some of that liquidity, guess what, goes into Bitcoin. Next, the dollar index. On the weekly time frame, we have this resistance at 56 on the RSI. If we look at the price action, 56 coincides with 104. That is potentially the top, or at the very least a local top for the dollar index. And if we go to the daily time frame and we look at the RSI, you're gonna notice that we have these three tops in here. They're not perfect, but we have one in September, one in April 2024, and one in the middle of October. That top is at an RSI of 72. So let's go back into the price and let's replace this with 72. And you can see that we have crossed that, and now we are having the first red candle at 72. That's because that is a resistance both on the daily and on the weekly. I'm not claiming that dollar index is just gonna stop there. It's very difficult to forecast an actual top of an index, a global one, but we have some chances that that top can put some stress on the dollar index, potentially to start coming lower. Our forecast was that we were going to top at 102.5 when we were hitting this level of resistance. We have some action in here. I was thinking that maybe that was going to be the top, but then after this green candle, we have to look for the next resistance. Dollar topping, gold topping, if they do, those are very good news when it comes to the bull run, continuation for the bull run. Guys, thanks so much for watching the video, and do not forget to have a look at the description. We have the best exchanges, including Bluffing that doesn't require KYC, followed by Bybit with 30k bonuses, OKX with 20k bonuses. These are my favorite exchanges. I use them myself. I'll see you in the next one. Take care. Bye bye.